Well, one company which is into waste management witnessed a profit growth of over 50%, backed by rising compost and RDF sales. The other just posted its best ever annual performance and is fast emerging as a key auto components supplier for the EV revolution. Hello and welcome all to another edition of the Noisemaker. I'm Ujjwal Sil, Equity Research Analyst at Desvelado Advisory, and today we'll be talking about two companies that have some potential of upside and are silently becoming stronger and stronger and could benefit from India's push towards sustainability and auto innovation. But well, before jumping to the companies that we've covered for today, let's see the disclaimer first. Any discussion, facts, or writing provided are for informational purposes only and do not constitute a buy or sell recommendation. Please conduct your own due diligence before making any investment decisions. So we'll head on to the first company that we have covered for today. It is none other than Antony Waste Handling Cell Limited. Well, Antony Waste Handling Cell is a company which is engaged in municipal solid waste collection, processing, and waste-to-energy projects. On May 30th, it reported strong Q4 FY25 results with the revenue up by approximately 15% year-on-year to 249 crores. It was driven by higher RDF. RDF is refuse derived fuel and compost sale. Well, EBITDA of the company rose 41% to 51 crores, with margins also improving to 23.2%. The PAT also surged for the company to 46 crore and was up by approximately 53% year-on-year. For the whole year picture, that is for the entire FY25, the full year revenue grew 7% to 959 crores. It was supported by the ramp up at the PCMC waste-to-energy plant operating at 82% capacity utilization and 96% recycling rates at its new construction and demolition waste facility. Well, what drove this growth for the company was solid order pipeline, expansion into high margin businesses like tire recycling, vehicle scrapping, and plastic EPR credits, and reduced reliance on municipal contracts. Looking ahead, Antony Waste is eyeing a massive waste-to-energy project in Kanjurmarg, Mumbai, with a 3,000 TPD capacity, which is 5x or 5 times larger than its current facility. If approved, this could be a major long-term revenue driver. Also, the company aims for 25% CAGR over the next 3 to 5 years, with a more diversified circular economy model that makes it less dependent on government tenders and more profitable over time. Now we'll head on to the next company that we have covered for today. Well, it is Lumax Auto Technologies. Well, this is a veteran in the automotive part space, which is now becoming a major player in the EV and auto plastic interior segment. For the Q4 FY25, the company delivered its highest ever quarterly as well as the annual performance. With quarterly revenue at 1,133 crores, it was up by 50% YOY, that is year-on-year. The PAT for the quarter reached 80 crores, approximately up by 43% year-on-year, and the EBITDA stood at 157 crores. Now heading on to the full year metrics. Well, the full year revenue for FY25 stood at 3,637 crores. It grew approximately 29% from FY24, and the PAT also grew by 37% from FY24, reaching 229 crores in FY25. Well, the growth was mainly driven by a 13% rise in OEM customer revenue and a strong aftermarket business. Well, but what's really exciting is the future plan of company. Well, the acquisition of IAC India will give Lumax a strong foothold in EV interior plastics. 2 new plants were inaugurated in Pune in May, adding 50% more capacity. That is, they're expecting higher demand. The FEE segment is expected to add 60 to 70 crores in revenue in FY26 due to OBD2 norms raising content per two-wheeler significantly. Well, also the company expects to reach 5,000 crore revenue by FY27, supported by a 1,350 crore order book, 40% of which will mature in FY27. Well, this positions Lumax as a major EV component player, especially in plastics and chassis at a time when OEMs are attractively reshuffling their winter base. Now we'll head on to some of the previous picks that we had covered in the past noisemakers. Well, the first company that we had covered was Dhanuka Agritech. It is up by approximately 4.3% from the date of our coverage. Next is Rossari Biotech, and we covered this stock when it was trading at around 715, and it is down by 6.2%. Third is Lumax Auto Technologies. We had covered this before too. It is up by 16.3%. Next is Interarch Building Solutions. We covered this when it was trading at 1889, and it is up by 13.2%. Lastly, we have Gabriel India Limited, which is up approximately by 1.8% from the date when we covered it. Now I'll be summarizing the two companies that we had covered for today. The first company that we covered was Antony Waste Handling Cell. Well, it showed strong Q4 with 53% PAT growth. The company is taking a big bet on Mumbai's next mega waste-to-energy project and diversification into high-margin circular economy businesses, which could boost further growth. The next company was Lumax Auto Technologies. It reported record financials, 2 new plants, and EV exposure through IAC India, which makes this a strong structural auto play targeting 5,000 crores in revenue in the next 2 years. So, well, that's it for today's edition of Noisemaker. Well, like the if you like the video, well, don't forget to scan this QR to access the full report. When you scan this QR, it will lead you to our company's website, and here you can access all our past coverages as well as the today's Noisemaker edition, which will have in-depth analysis on the 2 companies that we have covered for today. And if you feel that you've gained some insights, don't forget to like, share, and subscribe, and also hit the bell icon so that you don't miss out on any of our future videos. Thank you.